Hello and welcome to today's lesson. I'm your hard-working but indefatigable teacher, Mr. Burton. You will need to watch this video and take notes as you go. You may need to watch certain parts of the video a few times to ensure complete understanding. This is your homework and I will check your notes tomorrow before we get started. I hope you learned something.
Hello and welcome to today's lesson. This is our final installment in the Balance Day Adjustments series of lessons. Our final installment, Prepayments and Income in Advance. So we need to identify whether a transaction is a prepayment or income in advance, and we're going to record that relevant balance day adjustment in our journal as usual, and then prepare the relevant financial statement extracts. Right, prepayments, this is when we have prepaid expenses. So when a business records an expense during an accounting period, the amount of the expense must be the amount incurred and not just what has been paid. And the accounting concept being applied again as accrual accounting, we are recording revenues when they're earned and not when they're received in cash, and recording expenses when they are incurred and not when they are paid. Prepayments. So if the business is paid for an expense that relates to the next accounting period, does the business have an asset or a liability? It must be an asset, right? And an asset is a resource controlled by the entity as a result of past events, which is a transaction typically, and from which future economic benefits will then flow to the business. And we're going to call this asset prepayments. Let's have a look at an example. Bob's Biscuits has paid insurance of $2,760 including GST. Now, does the amount debited to insurance include GST? No. So our adjustment will not include GST. So, paid insurance of $2,760 including GST. This amount includes $184 including GST that relates to next year. We can only record what's been incurred for this year. So how much insurance relates to next year? Must be $160. So $2,760 including GST, $184 including GST that relates to next year. So the question is, will the insurance account have to be increased or decreased? Will that be a debit or a credit? Decreased. So we're going to credit insurance. And prepayments being an asset. Insurance on the income statement as an AE, administration expense. And prepayments is a current asset on our balance sheet. Income in advance. Business is recording income during the accounting period. The amount of the income must be for the amount earned, not just from what the business has received. Again, the accounting concept being applied. Accrual accounting, which we should know by now, recording revenues when they are earned and not when they are received in cash, and recording expenses when they are incurred and not just when they have been paid. Income in advance. So the business has received income that's not been earned. Does the business have an asset or a liability? It must be a liability. They haven't earned it yet, but they've been paid for it. This is a present obligation of the business as a result of past transactions, and the expected result is an outflow of resources, so representing economic benefits when settled at a later date. And we're calling this an asset income in advance. An example, Rental income has been received of $4,600 including GST. Now, does the amount debited to rental income include GST? No, our adjustments will not include GST. The amount includes $920 including GST that relates to next year. The business can only record what's been incurred for this year, so question you have to ask yourself and be asking yourself in similar situations, how much income relates to next year? $800 here. So rental income $4,600 including GST. The rent received account, is that going to be increased or decreased? Debit or credit? Right. Now we haven't earned this rent yet, so we're going to have to decrease that, which is a debit. And income in advance is a liability. On the income statement, rent received is going under other income, and income in advance on the balance sheet will be a current liability.